you want to put it there or there, and I can trim this off maybe just so it's not getting in the way here.
You have to excuse my bullet points here. This is the first speech I've ever made, and so you're going to have to bear with me a little bit while I get a little bit more practice.
You will do fine, sure. Thank you so much. Why don't you give us an idea where you're from?
I'm Sherman Oaks. I'm in Sherman Oaks, California, and I'm Jeralyn Spommers, and I am president and the broker of Private Financial Incorporated. Money is a tool that we all use to accomplish our wants, needs, and desires. And money is the #1 reason why we are all here today, to increase our financial knowledge for our continued financial success. I would like to thank all of you for being here today and for taking time out of your busy schedules. But I would also like to thank Dan Ringgold for all of his hard work and continued efforts month after month for putting on these events so that we can all gain in our financial knowledge. Let's give Dan a big applause. Since 1989, I have been originating conventional loans. And conventional loans are those loans that, for our A paper, for the so-called perfect borrower, that are sent to the bank for the best prevailing interest rate in the market at that time. Well, about 1998, I started investing in first trust deeds. And that is where I actually act as a bank, and I lend my private money, and my security for the loan is a piece of real estate. Shortly before the downturn in 2008, I had gotten pretty tired of the conventional lending field, of the constant hassle of always trying to get the lowest interest rate and all of the hassle of the bureaucracy and the delays of dealing with the traditional banks and the constant, the volumes of paperwork that they always seem to want and the constantly being conditioned. All of the love and the passion for the conventional lending field had really gone out of me. So I decided to retire. And I did continue to do a loan here and there for some of my old clients that I really enjoyed working for. But I wasn't a person just to sit down and do nothing. And I started investing quite heavily in first trust deed. And what was surprising is that the more I invested in them, the more that I developed a love for the hard money field. I found it to be a lot of fun. I enjoyed getting out and meeting the bars. I love getting out and looking at the properties. And what I really liked, though, is that I had a consistent monthly residual income that paid above market rate, and my security was a piece of real estate. But as I continued to invest and be involved in the field, I found that there were a lot of inconsistencies and incompetencies within the field. For instance, I would find that there would be the wrong disclosures in the loan packages or the loan docs, excuse me. And for instance, maybe I would get an owner-occupied disclosure that was put in loan docs that were really for non-owner investment properties. Another thing that I've found is a lot of times I would have a loan package that was brought to me to invest in, and I'm spending several $100,000 to make this loan. And the salesperson that brought it to me, they really hadn't looked at the property, or they had no idea about the condition of it. And yet they're earning a commission on that package, but they have no idea what the property is all about. So I can give you an example, one that really sticks in my mind, and probably will always stick in my mind. I had a loan package that was brought to me, and the picture was absolutely beautiful. And it looked like a primo property. And I looked it up on the internet, on a couple of sites, Zillow, and a couple other sites. And sure enough, it really looked like a beautiful property. It was a duplex, beautifully manicured lawn. But I had this feeling inside, I'd better go look at that property. So I drove out there, and sure enough, it was a beautiful property, just like the picture. But the only problem was the picture and the address and the property didn't match. So I went around the neighborhood and I matched up finally the address of the property, and it wasn't posted at all, but it had to be that particular property. And it was a muddy lot, and it had a house half built, it wasn't framed in, and there was no roof on the house.
Wow.
And I thought to myself, this is kind of like Match.com. The property doesn't match my loan package and the picture that I had. So I thought to myself, how could anybody do this to me? How could they expect me to spend the money that I had really worked for and spend part of, my life savings on an investment like this when I could have all kinds of mechanic liens? I could be totally upside down in that property. And understand, mechanic liens begin the day the work begins, not the day the lien is filed. So I started, what happened was in order to increase my knowledge and be able to protect myself as an investor, I joined the California Mortgage Association. And with this association, I found a wealth of knowledge and resources that opened up, and I had access to some of the top attorneys in the private lending field. And I also was introduced to brokers that really did run their businesses correctly. But out of all this frustration and the different incidences that did happen, I did develop a deep respect for the needs of investors, both borrowers and trustee investors, lenders. And I realized the importance of a good loan package. I realized the importance of a good set of legal docs. And I realized the importance of going out and meeting with the borrowers and going out and inspecting those properties. And I also realized the importance of dealing with someone that had an ethical and honest respect for me as an investor, not only in trustees, but also as a borrower. And out of all of these frustrations and incidences, I developed a deep desire to establish my own company in private money lending and trustee investing, which became Private Financial Incorporated. And now my goal with Private Financial is to provide as many hard money loans for borrowers as is needed, but also to provide safe, secure investment for trustee investors. Now, a lot of people will wonder, why would anyone pay the high interest rates of a private money loan? Or have you ever thought about increasing your investment portfolio into a safe, secure investment that paid a steady monthly income that is secured by a deed of trust that's recorded in the city, in the county recorder's office in the form of trustees? By the time I'm finished, you will understand the benefits of a hard money loan, and you will also understand whether or not a hard money loan is actually for you in your investment portfolio. And you, as an investor, will understand how investing in a trust deed will increase your overall portfolio value, and it is safe and secure, and it's secured by a piece of California real estate. So exactly, what is a hard money loan? What is an asset-based loan? What is a private loan? What is an equity-based loan? All of those terms are exactly the same. They are loans that have a great deal of equity in them, and the loans are actually based upon the equity in the property of 35 to 40%. They are an alternative to the strict, narrow underwriting guidelines of a traditional bank. Now, why would anyone want a hard money loan? There are many reasons, but just a few. They eliminate the hassles, the delays, all of the strict underwriting guidelines of a bank, and they eliminate all the income documentations like no tax returns, no W-2s. There's no credit scores that are required. Like if you got stuck in the last downturn and you happen to have a bankruptcy or a foreclosure on your record, that's okay, because the credit scores are not considered. And there's no limit on the number of properties that you can own. Whereas with the banks, they do have limits. And in an all-cash purchase, at the end of the close of escrow, you can immediately start the refinance process, and in 5 to 15 days, you can have 60 to 65% cash out of that property. Whereas the banks, there is seasoning there, and you have to wait at least a year to get your cash out. The decisions on hard money loans, the underwriting decisions, are based upon the equity of the property, the exit strategy, the marketability of the property, the ability to repay the loan, which is also, which it usually is the rents from the property, and basically, does the deal make sense? So, when does it make sense to do a hard money loan? Well, again, there's several reasons. If you need a fast closing, we can close in 5 to 15 days. There's no seasoning of funds. If you need funds for a very short period of time, that's fine. The banks don't like short-term loans. And if there's more good opportunities for a savvy, smart investor, then he has cash. Again, there are many reasons, and I can give you a whole list of reasons if you want to give me your business card afterwards, and I can email, the list of reasons there. But in other words, a hard money loan is a fast, temporary solution that opens doors to an exit strategy sometime in the future for more permanent financing. The reason the interest rates are higher, it's very simple. The risk is a lot higher to the lender. The interest rates run between 8.5% to 13%, and it all depends upon the loan scenario. The bottom line is the borrower has the opportunity to generate a substantial profit or savings very quickly, and the higher interest rates and the higher origination fees charged by a private money lender far outweigh and are very small in comparison to the overall profit of the real estate investment. Again, private money loans are based upon the equity in the property, the marketability of the property, the ability to repay, which is usually covered by the rents, and bottom line, does the deal make sense? So this brings us to another form of hard money lending, which is trust deed investing. I personally believe that real estate is the safest investment that anyone could put their money into. As long as you buy right and you watch your cycles, and of course, location, location, location. With the intention of rounding out your portfolio, have you ever asked yourself, where can I put my money that it's safe, that my capital is going to be preserved, and I don't have to go through all of the ups and downs of the stock market? Have you ever asked yourself, is there any way that I can put my money in something that I don't have to deal with the stagnating low interest rates of CDs or bonds? Investing can be very confusing and risky, and a lot of times disappointing. Yes, in the stock market, you can make a lot of money, and a lot of people do. But you have to have nerves of steel, and you really have to know what you're doing. And believe me, even the experts have lost money in the stock market. Do you remember the dot-com crash? I remember it very well. It created a lot of sleepless nights for me and a lot of fights with my husband. People get very confused over all the financial products out there. There's mutual funds, there's insurance products, there's annuities, CDs, bonds, and the list goes on and on. I am a firm believer in real estate. But another investment that parallels real estate is trust deed investment. And I believe that it is a secure investment and earns a consistent monthly residual income. I sleep much easier at night knowing that my money is secured in a trust deed that has a promissory note attached to it. My deed of trust is recorded by the county recorder's office. I have a piece of California real estate as my security. And I get a constant, steady stream of income every single month. I consider it one of the safest investments possible, but the first thing that you must have is the equity in the property. A lot of people will invest their IRAs and their Roth IRAs into trust deeds. Of course, with any investment, there is a certain amount of risk. Real estate does go up and down, and that is the reason that you must have the equity in the trust deed, 30 to 40% or more. So that when, let's say that you have bought that trust deed at the top of the market and the real estate market starts taking a nosedive, well, you have that equity and it's not eating into your capital. And even if it does, you can afford to hold on to that trust deed because you haven't eaten into that much of your capital for when the market turns around. And if, heaven forbid, that you have to foreclose on that property, you can afford to take it over and rent it out until the market changes around. Now, what happens if the borrower decides to stop making payments? Well, you have the ability to initiate the foreclosure process and sell the property. And you will get your capital back and all of the interest due and your expenses because, again, of the equity in the property. A word of caution, though, is to always invest in non-owner investment properties because you can foreclose in 3 to 4 months, and actually 4 months the foreclosure procedure is over with. But with the new laws and all the new regulations that's come about in the past couple of years, if you invest with a trustee in an owner-occupied property, it can take you several years for the foreclosure process to be completed. And then just before the sale, the foreclosure sale, they can initiate a bankruptcy and you're tied up again. And here goes that equity, and you're missing all of those payments, and anymore it's not a wise investment. And I would also tell you to look over those appraisals and make sure that, and double check them, and make sure that on those appraisals that there is, that appraiser has a Fannie Mae certificate in that appraisal. Our focus at Private Financial is in preservation of equity. We underwrite secure loans and we give a rigorous underwriting process so that our investors can relax and feel safe with their investment. In January of 2013, the California Bureau of Real Estate came out with a questionnaire that said that no more than 10% of a person that's investing in a trust deed, no more can that trust deed be no more than 10% of their net worth. And their net worth is in exclusion of their personal residence, their belongings, and their automobiles. Now, a lot of you might say, oh, am I going to have to collect those monthly payments? I really don't want to call up the borrower and have to nag them to make their monthly payment. No, you don't have to do that. We at Private Financial, we handle that for you. We also make sure that the property taxes are paid, and we make sure that they've paid their hazard insurance. With late payments, there is a 10-day grace period, but after that 10-day grace period, there's a 10% penalty. And most of the borrowers, they're pretty savvy, and they don't want to pay that late payment because it cuts into their equity. They have a lot of skin in that game also. So the payments are usually paid on time. Again, as I said, the rent covers the payment, usually. Now, if the borrower stops paying, we initiate the foreclosure procedures. We try to take the hassle out of your investment so that you can feel safe and sleep at night. The benefits of a trust deed is a stable monthly income that is residual, that has above market rates. And the security is a piece of prime California investment real estate that has plenty of equity in it. So if you're considering a private hard money loan on a particular scenario, I would be very happy to sit down with you and go over it and see if it's really for you. Or if you're considering investing in a trust deed, I do have a couple of them that are really good trust deeds, and they'll probably be gone very quickly once I release them to the public. But we can get you qualified as a trust deed investment, as a trust deed investor. So whether you're looking to borrow money or maybe invest in a trust deed, our goal at Private Financial is to provide as many private money loans to borrowers as is needed, but also to provide safe, secure investment for investors. I would like to thank Dan again today for being here, and I would like to thank all of you for being here. And if you have any questions, I'll be very happy to meet with you later on and sit down with you and answer your questions.
And actually, have about maybe 5 minutes, so if you'd like to.
Be very happy.
Answer a few questions.
Do you do after construction loan?
The what?
After construction loan value?
Yes, we'll loan up to 75%. Yes, but it has to be someone that is experienced in the field. Because a lot of those flippers, they do terrible work. But if they are professional, yes, we will loan up to 75%.
And which are the points? How many points?
The points run 1.5 to 3 points. And it all depends upon, what the deal is all about.
So I have a question. Is any given loan negotiable in terms of terms, or are your terms already fixed?
Well, they're negotiable to a point. Again, it depends upon the whole loan scenario. I mean, if it happens to be, I did a loan and I wouldn't turn an investor on it. I have it in my portfolio, but it's 13% interest. And it was only $50,000, but it was clear out in Lucerne Valley. And there's not much out there. I mean, this is pretty rural. But it happened to be at 2 highways that intersected, and it was really very good. And it was actually, I never thought I would invest in a bar, but I did. And it was someone that was selling it had sucked all the money out of the property. It was really quite run down. And I went out and I looked at the property, and I understood, what the borrower was wanting to do with it. And he was a real estate investor, and he had really been hit hard in the downturn. He was in the middle of building a big shopping center, about a $60 million shopping center, and it's all vacant right now. And his credit was really ruined, so he's kind of starting out, and he was a realtor out there. But to me, it was really a good investment, because I looked at what he was doing, and I saw the business, and I saw the potential of the business and what he wanted to do with it. And basically, out there's nothing for anybody to do except go to the bar. And he had this whole idea of bringing families in, like on Sundays, and serving sandwiches. And they had, they had a place for a band, and they had the pool tables. So I figured it was a good investment. And so help me, I've had it for a good year now, and he pays right on time. In fact, he's early. So, it was a 13% interest because it was clear out there, and I had disastrous credit. And, and there's not much out there. But I went ahead with the loan.
Paid off. Good deal.
Yeah.
Risk paid off.
Yeah, it did pay off. And I figured, for the price of it, it definitely has to be worth it. And I thought he was brilliant on his business strategy. So, and I thought, I thought it was pretty good. He had a couple other businesses going, and and they even paid bikers to stop by, when they do their charity runs. So
All right.
I said, I never thought I would invest in a biker bar.
So I thought in California, trustee sales didn't have right of redemption.
What?
I thought in California, trustee sales did have the right of redemption. So how do borrowers delay that possession process?
Well, you just started with the foreclosure proceedings, and there's companies that specialize in that.
Right.
But as I say, you do investment properties only. Stay away from the owner-occupied. There was a time that we used to always invest in owner-occupied properties because we felt that people took better care of the properties. But the way the laws have changed and everything, I wouldn't touch one of them. But it goes very quickly with non-owner investment properties,
Okay.
and you don't have the problems with them. Okay.
Do you fractionalize the notes, the trustees?
What was
Do
that?
you fractionalize the?
Yes, we
Okay.
do.
And
Yeah.
what's the range that you typically deal with on these notes?
Could be any place from what type?
Oh, 30,000 to 2 million
Oh,
or?
usually about 50,000 to $1 million.
Okay.
You know, I usually, if it's over $1 million, I'll send it to, you know, one of the big companies
Got it.
there on it.
Okay.
Yeah.
Thanks.
Jeralyn? Jeralyn, I got a question for you.
Oh.
So was I clear that you don't do private loans on residential properties, it's commercial properties only?
No, homeowner.
I'll do 1 to 4 units, but they have to be
Owner
rentals.
Okay. Okay, but you wouldn't do single family?
Yeah, they can be single family
as
as
long
long
as
as they're rentals.
Okay, gotcha. So that means that anybody wants to rehab in here and they need a quick loan to go through that process,
Right.
perfect.
Yeah.
But not on their primary residence.
But not other
But
primary.
not on a primary
Yeah.
residence,
Gotcha,
no.
gotcha, okay.
Yeah.
Excuse
And
me.
that's the only thing that I used to do, used to
Yeah.
invest in at one point, but not anymore. Yeah.
Excuse me, fraction-wise, does that mean that your investors get to pick which properties they want to invest in rather than just going to a fund?
What it means is that you have one trustee, and maybe one person can't afford the whole trustee,
Oh.
so you fractionalize it. Maybe somebody will take 25%, another person will take 50%, another person will take the other 25% of the trustee. So you have like 4 investors on one trustee.
And the investors get to pick and choose which properties, it doesn't just go into a general fund, right?
I beg your pardon?
So the investors get to pick and choose which properties they want to invest in. The money doesn't just go into a general fund. You
No,
pull together-
I don't like pools, and I won't do pools. I am just a person that, I learned from a very wealthy lady that you keep your money very close to you. And I just don't like pools at all, and I know my our CPA does income taxes for a lot of people. I know him through the California Mortgage Association, and he does the income taxes of a lot of pools, and also a couple of one of the largest loan servicing companies in the United States, and some of the other loan servicing companies. And he says that he has never really seen a pool that is really run correctly. And he says it kind of bothers him a little bit. But I'm just a person that I want my money close.
So you pick and choose which properties.
Yeah.
And
Yeah.
what do you generally pay your investors?
Pay the investors get any place from 8 to 12%. You know, it just depends on it. You know, again, it depends upon the property. You know, my 13% interest, I mean, it was pretty risky. I wouldn't turn it over to an investor because, you know, they would think that I was trying to push something off on it, but I felt it was very secure. I also did one at 15%, but what I did was I knew the people very well, and I had watched this couple and the way they were flipping properties and everything, and I had watched them and studied them for like 2 years. And there was a property that came along and all their money was out. And I went in at 100% financing, 15% interest, and I gave them $6,000, $7,000, you know, toward fixing it up. And, you know, it was 15% interest. Would I turn that over to somebody? No, because they would be scared to death. You know, what happens if something goes wrong? I felt secure in it because of knowing them. But if I had an investor, they don't know that couple. But, and it turned out very well for me. But you just have to judge it because you get feelings also. That's the reason it's so important to meet with your borrower. I even say, you know, you as an investor, go out and meet the borrower. You know, you have a right because you get feelings from borrowers. You know whether they're an honest person or whether they're trying to, you know. And yes, you know, you do have to look over those appraisals, and sometimes you just do a double check on them. And unfortunately, they still have appraisals that aren't quite right. You know, today, I didn't think it was going on, but 2 weeks ago, so help me, I came across one. But, you know, it does happen, and you just have to be careful. As I say, I like to see an appraisal that has a Fannie Mae certificate in it, and just to double check. But, yeah.
And you can hold the rates until the last?
I
Can
beg
you
your
hold the rates, the interest rates, and you hold them on the last?
Do I hold them in?
Yeah, it's possible.
I did this for this 15% interest. I knew it was a fast flip, and, but I knew the people so well. And, you know, as I say, I had checked them out with several investment clubs where they would, you know, bring people in by buses to buy properties, and I had checked them out with their attorney and, you know, quite a few people before I ever did something like that. And I just don't do that normally. So, and I wouldn't give an investor of mine, you know, one of those kinds of loans, because I don't want anything to go wrong, you know. I've got to sleep nights too, you know, with the investors. Yeah.
Jeralyn, may I just make a general comment? You began your presentation with the fact that this is the first time you've done public speaking.
Yeah.
Well, some people are very, very practiced at public speaking, and sometimes they're absolutely empty. We could think of someone with a hairdo. And you have great content. You are totally encompassing with all of your information, and the way you presented that, fantastic. Thank you so
Well, I
much.
can say I believe in what I'm doing, and
You do, yeah.
so.
Great.
Yeah, I think we've got one more question here. Do you have a question?
No, I'm good. I'm good, thank you.
One more here, please.
One more?
Oh, okay.
Are the trustees the same as, trustee the same as second TV?
As a what?
Second TV, second.
A second trustee? Yes, it is the same, but I would say do not invest in a second trustee. Invest in first trust deeds only, because you have a chance of being wiped out. Now, I have invested in second trust deeds, but they were like no-brainers. I felt that the first trust deed was low enough that if anything goes wrong, I can step in and I can pick up that first. And there was a lot of equity in the property. I'm talking about 30, 40, 50% equity. And the property was really a good property. In fact, I invested in one, I think it was like 40% loan to value, and I really wanted them to not make payments. But of course they made payments, because it was a great property and I'd love to have had it. But it's too easy to get wiped out with them. And when you start getting up into the high loan to values with them, you can get into some problems. And sometimes it's better to take less in an interest rate and be secure than try to go for that high interest rate and not be quite so secure. But overall, I don't believe in investing in second trust deeds, and I do very few of them.
I think that's it.
That's it.
Thank you so much. Excellent job. I'm proud of you. Good job. So, yeah, we are going to take a short, quick break here if you want to, you know, get something to eat or drink or whatever. I'm going to get Jim Banks up here. We're going to test his computer out, make sure he's good to go, and we will